Congratulations! You feel like you're ready to buy a house. Well, the first question you're probably asking is, how much can I afford? Answering that question means looking at several factors. Beyond the property's price tag, a host of other financial and lifestyle considerations need to be figured into your calculations. Anyone in the real estate industry will tell you that the very first step to buying a home is finding out what you're pre-approved for. Not doing this is like going shopping for a car without knowing your budget. To walk us through this and other important factors in financing your new home is Pacesetter's sales manager, Tyler Pollock. Hey Tyler, thank you so much for being here today.
Thanks, Nicole. Thanks for having me.
So if people are starting off their search, we want to help them avoid major mistakes. And one of those major mistakes for especially first-time home buyers is not understanding the difference between two very important terms when it comes to financing their home, and that is being pre-qualified versus having a pre-approval. So let's start there.
That sounds great. There is a large difference between your pre-qualification and your pre-approval. Your pre-qualification is really just your starting point for your home purchase. With that, what you're going to be dealing with is usually just a phone conversation to your mortgage lender using an online tool. The financing records that they would be looking at that point in time is usually just your income currently and one down payment you have saved for your new home purchase in that regard.
So you can kind of think of it as plugging those numbers into that online calculator from your lender or mortgage broker, and you say, this is what kind of house I think I can afford, this is my down payment, or you can also put in, this is what I want my monthly payment to be, and then those numbers will spit out for you.
Exactly right, yes. It gives you a starting point to say, hey, what am I going to be looking for in this marketplace? Of course, everybody's looking for a new house from a point of pain, usually. Their current living circumstances aren't what they're wanting to live in. So they're going out into that marketplace to solve those current living circumstances. Now, where do I get that starting point? Hey, I have my mother-in-law living with me. I need a little bit larger home. Let's see what I can get pre-qualified for. On that front, it'll give you a dollar figure, and you can go out into the marketplace and see if that dollar figure gets you the home that you're looking for to solve that particular need. On that front, you can move forward then to the next step, which would be your pre-approval.
Okay, so this is a casual estimate, doesn't require a credit check, there's no paper involved, and it's just really your house budget.
Exactly
when you
right.
Start your initial search.
And you brought up a great point there about that credit check. Your pre-qualification doesn't require a credit check whatsoever. It's just a rough estimate to get you going in that marketplace. When you jump into your pre-approval, that's when your credit checks are going to be coming into play at that point in time.
Okay, so let's talk then about your pre-approval.
Pre-approvals are when you're sitting down and getting a much better estimate or even a firm idea of that dollar figure that you're going to be spending. Again, your pre-qualification is just to get you out into that marketplace to see if you're able to solve your needs with that basic number. The pre-approval, you're going to be sitting down with your mortgage lender and giving them all the required documents to see your entire financial history and your current state that way. So that can involve T4 slips from past years, usually the previous 3 years. They're going to usually do a credit check at that point in time to see what outstanding loans you may have, employment letter from your current employer, any other bill payments and different items that you may have that's impacting your current financial well-being.
So even maybe that student loan that is a very low monthly payment that you might not notice on your day-to-day living expenses, but it's going to affect that debt to income ratio.
Exactly right. The student loan, the cell phone bill that was forgotten about, the credit card payments that were missed last month, anything like that can definitely affect your pre-approval when you're going in to get a much firmer number from your bank or financial institution that way. So prior to that, again, in that pre-qualification stage, you want to make sure that you kind of have all of your ducks in a row and make sure that you've cleaned up your credit history, that there's no outstanding balances on anything, and that you're definitely keeping up with all of your monthly payments.
Could you get more than one pre-approval?
You can, and a lot of people do like to shop around at different financial institutions. There's mortgage brokers, there's banks to shop through. There's a lot of different products out there when it comes to mortgages. The general misconception in the marketplace is that a mortgage is a mortgage is a mortgage. However, there is a lot of different mortgage types, different regulations, different criteria around mortgages that can help one family better in that particular circumstance versus another family that may need a different style of mortgage to help their current family situation. At this point, you do get a credit check pulled usually. Now, that is a very poignant question that you want to be asking the person that you're talking to when it comes to your mortgage lender or broker that way. You don't want to have too many credit checks pulled in a short period of time on your file. That can hurt your credit score overall. So it's something you want to definitely be asking, maybe even prior to them going forward with your firm pre-approval. This way you can kind of shop the products that you need in the marketplace before you decide to move forward with a particular lender. You can see if they're pulling your credit rating or not and make that decision of which 1 to 3, I would usually give you that estimate, you want to move forward with and get a firm pre-approval from.
And just to go back to the products, like you're maybe thinking about maybe a first-time homebuyers grant or a newcomer to Canada grant, things of that nature, right?
And that's correct. For example, there's different programs out there for RCMP officers, military even, depending on how long you're going to be living in that current home. There's different penalties that can apply as well. And if you're looking at living in that home for that 5 years or 1 year short-term basis or 10 years, that could determine the mortgage that you're wanting to move forward with and even the financial institution that you're wanting to use for that mortgage.
Very, very good point. That might not be something that everybody knows about, so thank you for telling us
Yeah.
that. So the next thing that we really need to get a big financial picture is obviously how much can I afford monthly, and there's a lot of factors that go into this equation. Let's walk through it.
Yes, and when you're going through the steps of your pre-approval with your mortgage lender, financial institution, they're going to ask you for those ones that they're going to be looking at to give you that hard, fast pre-approval number for you to move forward with into the home buying experience. However, there's things that a family should take into consideration as well. I'll start first with what the mortgage lender is going to be looking for. They're looking at the bigger picture items, your car payments, your insurance payments for your boat or RV that you may have, outstanding school loans, as you mentioned prior to. Those are the big ticket items that show up on your credit report. Those are the things that they're going to be wanting to know about, and that's what they're going to use to determine your overall approval amount. Now, there's other things that happen on a day-to-day life basis. How many times you're going to the movie theater in a month, how much your family likes eating out, how much you like spending at West Ed on any given day.
How much I pay for my streaming services.
There you go, exactly right. Those things all need to be into calculation when a family's looking at their financial well-being moving into their home purchase, right?
So it's not just the mortgage amount, it's not just the taxes amount, it's your monthly budget.
Exactly
all
right.
things that are going out of your pocketbook. Exactly
right. Usually when a family is looking to purchase a new home, they're looking at spending more than they currently are, right? That means their property taxes will go up, usually their utility bills will go up, and of course their mortgage amount will go up if it even existed to begin with. So you really need to be looking at your family situation on a monthly basis and make sure that you have all of those payments laid out for your family so there's no surprises moving forward into the future. On that note, when you're purchasing a new home, you're going to want to put aside about 1% of that purchase price for any things that may happen at time of possession as well. Closing fees, different things like that that may come up that were unexpected. You want to have a little cash put to the side for that just in case fund.
And that reminds me about insurance, because that can be one of those surprises for someone who hasn't gone through the process before. And there's 3 different kinds of insurance. when it comes to financing a home.
Yes. Insurance everywhere in this world today. Of course, we need to be secured moving forward in life. So the first type of insurance that you'll mainly deal with the bank on is your mortgage insurance. Now, there is 3 major lenders for mortgage insurance out there, usually CMHC, Canada Guarantee, or Genworth is your mortgage insurance. That is something that you will be discussing with the bank that needs to come into play with your home purchase if you're doing anything less than a 20% down payment. With that 20% down payment, you won't require mortgage insurance on your property, but for the vast majority of us, we're going to require mortgage insurance. That insurance that you're purchasing is for the security of the bank. It unfortunately doesn't do nothing for the purchaser. The insurance is to insure the bank in case you default on the mortgage. So if you're not able to make your payments on the house, they are using these larger insurance to make sure that they recover the funds from your mortgage that way. So that is included in your monthly mortgage payment, so you don't have to really worry about that. The bank will figure all of that out. The most popular question I have on that is, if I'm pre-approved for $400,000 and my mortgage insurance is going to be $25,000, do I now have a pre-approval of $375,000?
Good question.
No, you don't. That is tacked on top of what you're able to spend in the marketplace. So the bank will finance that for you over and above what your pre-approval amount is stated. So you don't have to worry about that in your overall purchase price with the home.
There's 2 other ones.
Yes.
We have life insurance and then home insurance.
Yes. 2 good things that you need, definitely. So I'll start with life insurance. Life insurance with a home can be offered in 2 different ways. Your bank will generally offer life insurance as part of the mortgage proceeds. That will get lumped onto your monthly mortgage payment. That insurance, and the way it looks, is only for the amount of the outstanding mortgage. So over the years as you pay down your mortgage, the amount that you're insured for gradually decreases. However, the monthly amount that you're paying will stay the same because that is prorated at the very beginning of the mortgage. Another way about going to life insurance is just getting a third-party life insurance where you're just getting an overall amount of, say, $500,000, $600,000, $400,000, $200,000, doesn't matter what it is, but you can just get a basic amount. Usually that's term insurance, so you can go 5 years, 10 years, whatever it may be. That you're going to have a set amount for on a monthly basis. That's not included in your mortgage payment though, so be wary of that. That's going to be an added extra expense for you.
That's the third party part.
Exactly right. But that will be a set amount that you're insured for that never decreases. So as you pay down your mortgage, you're still going to get that $500,000. Now, keep in mind that life insurance, whether it be from your financial institution or from a third party, isn't required to purchase a home. However, it is a nice peace of mind for you and your family.
I thought you were going to go to the next point, which is home insurance is required. So let's go there next.
Home insurance definitely is required, and that's required from your financial institution. That's a must-have. Your lawyer will require that documentation before they actually allow you to close on the home that way. And of course, home insurance is for any unexpected events that may happen with your home. Fires, flooding, other damages that could potentially happen to your house.
Windstorm to your roof, your roof tiles.
Hail, right? In Alberta, we do get that hail. So, you know, any of those damages that can come from naturally, or they can be man-made. I mean, heaven forbid that someone runs into the front of your garage and takes out a corner of it, whatever it may be on that front, that home insurance is going to come into play. Funny enough, simple fact about home insurance, they actually do cover all of your contents of your car as well, because your car insurance doesn't. So your home insurance will actually cover the contents in your vehicle as well.
Sounds like you know from experience. Something happened.
Yeah, so you go through life, right? But with home insurance, like I was mentioning before, it is a requirement before you close on the property to make sure that that asset for the bank is secured no matter what may happen to it.
Just like your car insurance. It's a requirement.
Exactly right. So, and of course, that's only if you have a mortgage on the property. If you don't have a mortgage, well, hey, you're lucky, and then you get to choose. But most of us still have mortgages these days, and home insurance is a requirement. Home insurance you can get from a number of different providers out there in the marketplace. But again, that is one factor that should be calculated into your monthly expenses as well.
So we touched a little bit on home maintenance, and you said you suggest 1%, but home insurance isn't going to cover, you know, if your dog chews up the stairs, or you have a toddler that likes to play hockey in the basement and now your drywall is totally destroyed.
Exactly.
So that is something to factor in as well, is like just living in the home and things that might happen to just, I mean, you're buying a brand new home.
Yeah.
Sometime, like with Pacesetter, you're buying brand new.
Right.
So there's warranties that cover a lot, but it's the living of the home that you need to consider that maintenance budget for.
Exactly right, and maintenance of a home is very crucial. There's a lot of different things that can come up, but I mean the simplest things: replacing your furnace filter on a regular basis, maintenance of your hot water tank, or with Pacesetter Homes, your hot water on demand system, because we go a step above, but sealing your driveway as well, right? Making sure to keep up your concrete on the front of your driveway. Sealing it every year to 3 years is definitely something people should do to keep up their concrete. But there's a lot of little things around the house that just need to be kept up. Putting a portion aside for when your shingles need to be replaced as well, some of those longer term maintenance things. I do recommend that everybody should keep a portion of their monthly proceeds that they're getting for an income to the side in a savings account for those long-term expenditures that can come out of home maintenance as well.
Okay, so as a little bit of a summary, your monthly amount is going to include your mortgage amount, your taxes for your property taxes, your multiple insurances, how you live your life, including groceries and everything else, as well as a home maintenance budget. So that's 5 things minimum, and I'm sure there's a little bit more in there. So to help everybody out, we have a download link in the description below for you to use our budget worksheet, and that will help you plug in all your numbers and understand what you can afford monthly. It might sound like a complicated process, but we have people who can help, right?
Yes, we do have our area sales managers that are able to put anyone in touch with the mortgage professional that they may need to help them through this process.
The experts that understand the whole process, so they're in good hands.
Exactly right.
Thank you so much for your expertise and time today, Tyler. It was a pleasure having you.
Thank you, Nicole.
So if you're a house hunter looking to build new construction, be sure to like and subscribe to be notified of all our upcoming content. Thanks for watching, and see you next time.